What's up guys, ChartSmith here, back again with a new daily market update video for you guys. Yesterday was a pretty interesting day. Asia and London, not really interesting. I talked about a play at the London Open yesterday. After London you took out the London high, and the high that took out London gets protected by AM, and AM just straight up dumped down. Was something news related before that as well, because there was a lot of volume produced in these candles over here after that liquidity hunt at the London high. So that was probably something news related, and otherwise a lot of big people stepped into sell orders right here, and then this protection of this high is really logical then. So let's get into the price action of today. Let's start at the higher time frames. As always, I mapped in a point of demand here for the market to get into. I did it yesterday already. I drew it in with this consolidation block right here, right after you gained a high here. It also you can also just draw in this whole order block, but I like to specify and optimize my demand zones to these kind of blocks, and then you just cover this whole part. And as you can see, until now it probably is gonna make its high low here. It's not confirmed until we break above this high again, then it's confirmed we have a high low, and we can look for a new high low or a higher high, or just continue pushing up. Of course, you never know, but it's likely that we can expect more upside then. So we touched in a really nice demand zone. Not really any particular PD arrays or high time frame zones I'm looking at right now. Of course, I mapped this out yesterday. We front ran that. We just rejected from this whole resistance block over here. You can see a lot of lows that have been here, a lot of bodies here, and consolidation. So that's just a whole point of resistance that the market rejected there. Today, when Asia started, we tapped into that demand zone. Asia pumped up, and right now it's really likely we're in a market maker buy model. If you look at the structure, if you pull it from here, you have the structure pull over here, which is also your PM high. If we're gonna break above this PM high, it's really likely internally we can make a higher low. It doesn't need to be this low, of course, but you get the picture. We're gonna make a higher low, and the rotation towards this high is really likely. And as I said, on the higher time frame, if we're gonna break above this high, you confirmed your higher low, and then new higher time frame bullish price action is also expected. So today, until it's proven otherwise, I'm only looking at longs, because it's pretty obvious we're pumping up, and I'm not gonna play against the bias. Also, higher time frame is still up. There is a big SMT divergence with ES on the PM high. ES is just a lot stronger than NQ today. With SMT divergence like this, I don't get too bearish quickly, because yes, if this would be the divergence, and yes, after this one would also consolidate around here and look more bearish than it does, then okay, I'm obviously gonna look at it, because then it's a pretty strong divergence. It's your PM high, it would be with the London high, etc. But this is just a really big divergence also with NQ. NQ is so far behind, then I don't really pay too much attention to it. Unless we're gonna have, I don't know if it's there anymore, we'll have to have a look. It's not there anymore, but there was a small SMT here. If you're gonna get a local SMT like this, I can see it right here. But if you get a local SMT like this, and you're gonna break bearish internally, and you can see there's a lot of liquidity built up, and I get the trigger by some sort of manipulation like you did here. A liquidity hunt, SMT, break bearish, leave open your high, inverse a nice gap. Then I want to target trend liquidity like that. Then I'm obviously gonna look at shorts, but that's not then this higher time frame SMT is not only the trigger. 9 out of 10 times when you have a big divergence like this, NQ is gonna catch up and also take out PM high. So I'm still a lot more bullish than bearish. What I am looking at for long POIs, because I'm not gonna, yeah, it's not really nice to take a long in a really high in this impulse, because what is your target gonna be? Over here it's only your PM high and there's nothing in between. Of course you have these equals there, but it's really your PM high. I like to play, if you have these kind of things, build up local trend liquidity, then you also have a local target. And you can step in on the bottom, and then it's not really high in your move. You're not gonna step in here, right? Because what is your target? There is no clear target. Of course, if you expect more bullish price action, then you're gonna target something at the highs. But I like to have a clear drawn liquidity. Right now it's your PM high, and otherwise I would like to have some local built up liquidity points, like this on the bottom. This is really nice built up liquidity that I would like to target in a short. What would be really nice for a long play or a short play here is if we clearly see that we can't take out PM high yet. Well, we have a lot of nice trend liquidity to build up. Then I'm gonna look for shorts if I get some triggers, like a break towards the downside, leave open your high, then look towards the lows, or lure in some sellers to maybe come below this low, take out the high again. Then all the people that started selling here in this whole move get liquidated. If I see that the market makers probably are in this market, then I'm looking at shorts. Some things like that, SMTs of course. And otherwise for longs, as I said, I don't really want to play any longs here. If I don't get the short entry, or I don't think I can take the short entry, I would still like for price to come down towards the lows, take out all this trend liquidity, leave behind some liquidity, maybe take out the London low. It doesn't need to, it can also stop here of course, but if it takes out London low, thank you. There's also this demand zone that I mapped out. It's just a block, as I pointed out over here as well. So this is a POI zone I am looking at to take longs. That would be a really nice scenario for me. And yeah, that's pretty much it for the local picture. There's not really any PD arrays I want to map out or put in my chart. This is a nice example as well for having no target and I'm not gonna take the trade. If you look at this, you have just bullish structure, you make your London low, leave open your London low, that's really bullish. You protect the lows, you take out the highs. As you can see right here, you have the high right before London opened, you set the London low, that high gets taken out over here. Then a lot of people start to buy, they're gonna put their stop loss below this low of course. Now you see the market takes out the low, liquidate a lot of buyers, also a lot of volume here, as you can see. You also have a really nice gap to inverse and a small structure pool to gain. And then it's really likely that price is gonna take out this high again. So normally I would take a trade like this if this is your first target and you have something in between. If price would have made something like this, you know, then you have some other liquidity points to target. But right here you didn't have that. For me this is a really nice confirmation that the early buyers have been wrecked. The bigger people have can enter their positions, and we have a really nice entry trigger here with the gain and the inverse value gap. Well, then I would have to maybe look at another time frame. Yeah, there's also a 2 minute. Would I don't know if I would have put it in this 2 minute. I probably would have just placed it on a 1 minute to be safe. You never know what happens. So put it in a 1 minute. You have to put your stop loss below this low. Locally, this was your only target. What is to the left? Nothing. The only next target is PM high. What would I have to do? I normally want to take a minimum of 2 risk to reward on a trade. The sweet spot is 3 to 4 risk to reward, but minimum of 2. Then I would have just put my take profit somewhere in the dark. There's nothing here. So then it's no trade for me. That is that. I hope the plan is clear for today. I also spitted some knowledge on this one. So I hope you guys liked it again. If you did, leave behind a like. Tell me what you did like. Also leave behind some critics, of course. I'm always here to learn. And then I will see you in the next video. Ciao.